Chevron CEO Mike Wirth told Bloomberg this week that global oil and gas prices will remain higher for longer as oil companies resist the urge to ramp up production. The reason? Investors are not on board with increasing production. It's true that oil and gas investors still have trepidation when it comes to the long-term future of their oil and gas investments. And these investors are looking for cash returns now, not later. A later which may or may not be hospitable to oil and gas. But according to Wirth, investor caution is also due to weak equity markets. Oil and gas companies do have the cash, but, says Wirth, the equity market is not sending a signal that says they think we ought to be doing that. Add to those concerns the climate change factor. Investors may worry whether companies are doing enough to adapt to the new environment, and whether they are doing it quickly enough. Government and public climate pressures only intensify such worries, making the already difficult decision to expand even more difficult. Wirth added that the emission footprint of future projects has become a big part of decision-making for energy companies. But it's not just oil and gas investments that energy companies are shying away from. Wirth told CNBC that Chevron will not be sinking a lot of money into wind and solar projects either, because it just doesn't create enough value for its shareholders.